President Trump yesterday confirmed that he was going to levy tariffs on Canada, Mexico, and 20% actually on China. That was an additional 10% from what he had initially indicated. And this caused the equities market in the US to drop. And a lot of people, from what I've seen, there's been a bit of sell-off. S&P 500 yesterday, it was down today. It started a little bit on the downward side, but it has already started recovering. Stocks such as NVIDIA, which saw more than 10% drop yesterday, they have already started coming up in the upward trend. And I am just wondering where this is going to leave the market to. So in this video, I'm going to share with you what I am going to be my thinking process in terms of how these tariffs are going to be impacting both the Canadian and the US equities market, using some data from other credible researchers and experts in this field. I'm also going to just indicate that this video is meant for educational purposes and entertainment purposes, even though in this case, some of the things that I highlight here, I'm actually applying them in my portfolio. So at the end of the day, it's my portfolio. I'm comfortable, with the risk tolerance that I take. The most important thing I always share on this platform is that investing, you are playing with your money. So it is very, very important that you educate yourself. And if you have any questions, you want to learn more about how to invest in the markets, feel free to reach out to me so that we can talk. I'm not an investment advisor, but what I do is I do research on companies. And in this case, I'm also using some of my experience and also looking at things in real time, for example, the impact of tariffs, and accordingly adjusting my portfolio to at least hedge it and also grow it. Now, I think the first thing that I will say is that let's see what's really happening in the stock market, and then we'll take it from there. I have some slides, a few slides that I will refer to, and I also play you some clips on what's really going on in the market for more broader context. The first thing that you can see here is that most of the companies that I follow, in this case, for example, it's unbelievable because these stocks, they actually dropped by quite a lot. If you look at, let me just look at the weekly time frame. You can see that NVIDIA, it started the week, even at this point, let's say even at this point, it was at $134, right, per share. Right now, if you are looking at it, went down as far as $110 a share. But it has started going back up, and you can see that most of the stocks here in the US equities market, they have already started recovering. These are some of the stocks that I follow. Google is up 3%, and President Trump is going to have a State of the Nation address. So we are going to see what he's going to say, and this is what happens. I had a position on NVIDIA through the leveraged ETF NVDX. I was caught in there and I just didn't sell. I was caught in there, but I can tell you that the position actually has recovered, and I even got in lower. It's not yet broken even. So that's how a lot of people lose money, because if you then panic, let's say if the loss was like 1,000 as an example, right? You sell at that point, you lose money. But in some cases, sometimes it makes sense to sell. But I'm just saying this in the context of my own portfolio. And that was just a trade that I had meant to get in, but I was not able to get out at that time yesterday when this whole drama started unfolding. You will see that I like to usually use the S&P 500 index, and you can see that it is still down, but you can see that there is actually a V recovery. Again, still, this is going to depend on a lot of factors. But one thing for sure, the US stock market, in my view, is not going to remain the same because there's a lot of uncertainty. When I'm trading, I've been using some strategies like trading equities, trading VIX ETFs, and I was just mostly using technical and fundamental analysis. But the unfortunate thing is that with this uncertainty, because what tariffs, as I will show you, do, they, in this case, increase the prices, right? Of, in this case, for the people in the US, those who were importing whatever the products that will have been levied tariffs on. So what that means, you probably see the increase in price of gas and other commodities. And another issue that happens is if countries retaliate, like in this case, Canada is, as you will see, has clearly indicated that they are going to retaliate. Let's see what President Trump said and also what government officials in Canada are saying as well. So this is very, very important. Now, this is the situation here. You can see that here, Canada, they are going to impose another $155 billion dollars in retaliatory tariffs that are targeted on specific industry. And this is cases of BBC. So this is what is going to be interesting now. And I will share with you some of the insights from other credible economists in a short space of time. But the thing is, what's going to happen is, like in this case, China has indicated that they are going to retaliate by 10 to 15% tariffs on some commodities that the US also imports from China. Now, this becomes a trade war, right? So this is what President Trump said. So I just wanted to give you a glimpse of the background of tariffs. Now, what has been happening, and when I'm investing in the equities market, particularly I invest in the US, but to an extent, also some Canadian companies. I opened a position in one other Canadian business, I think 2 weeks ago. But I'm betting on the fact that in the future, if I'm right, I might get some capital gains if the market or that particular security or stock goes up. But one thing for sure is that uncertainty has gone really up as of February 2025. And you see that here, this was COVID-19 period epidemic. So you see that it went up. This is an index that measures uncertainty here in Canada, right? Economic policy uncertainty. And we currently have a prime minister who is going to be leaving office, and we are going to have a new prime minister, I think around after March, if everything goes well. So this uncertainty is also creating a lot of challenges for businesses. For example, if you wanted to have some capital expenditure, if you wanted to invest in Canada or even in the US. So what that means is some businesses, in this case, I'm talking about publicly listed companies, they might be slowing down. So you see that sometimes the shares may go down, and I'm going to share with you my thoughts on my investing strategy. So this is very important because during uncertainty, if you are right in terms of your choice, let's say if you buy wonderful businesses at a discount in this chaos, and then when this uncertainty clears, then you can probably make a lot of money. Again, I'm saying this, it's not investment advice, with a caveat that, it's very, very important to understand the businesses that you are investing in. And if I look at it, the cycles in the US, President Trump will only be there like for, let's say, the next 4 years. In Canada, I'm confident that things will stabilize and this uncertainty is going to drop. By the time that happens, then that might be a time when some people might want to start getting into the market. And that means at that time, for me, I will be sitting on some profits if I'm right. Again, this is just a matter of balancing risk and reward, potential risk and reward. And it's very, very important to understand the businesses that one is investing in. Now, I got this from X, and it reminded me our basic theory when we were doing, issues like to do with the impact of these economic tools. So if we are looking at tariffs, we are looking at, in simple terms, I don't want to bore you guys with a lot of, theory, but in basic theory, if we are looking at the situation of tariffs, right? You can see here the demand in this case, let's say, for example, the US were importing oil from Alberta, and then there's an additional tariff, a tariff that is added. What it means is that all things equal, it also depends on the type of good to say, is it something that consumers will just switch away from? But the truth of the matter is that it just causes the price of that particular tariffed product to increase. You can see in this case, right? And there are quite a number of assumptions, but I'm just making this in simple terms, right? So it moves from this price to that by the magnitude of the tariff. In this case, if it's 25%, that will be an additional tariff, an additional price that, in this case, the Americans will pay. If Canada retaliates, in this case, the impact might be a little bit subdued, but the impact would be on the GDP because that would hit our GDP. And I'm going to show you some of the insights. But another challenge that I see, I was looking at this from the Atlanta Fed GDP, and it tracks the GDP in real time. What has been happening is that these forecasters, what has been happening is that they are now forecasting that the GDP in the US is going to contract. And you can see that at this level, right? This was March 4th, and that's when I'm recording this video. You can see that the GDP in this case, which is, we are looking at the goods and services in this case that are produced in the US, right? Because some industries in the short term, they are going to be affected. Maybe they are going to reduce their products or the services that they have been producing, and it's going to affect the GDP in the US. Now, there is also another school of thought from what I saw. I got this from Adam Coe online, and one of the things, and I agree with him, I listened to the Treasury Secretary in the US, and he was mentioning that they are targeting to reduce the Treasury yield. In other words, they want to lower the cost of borrowing, and there are issues like the Dodge that are slashing some costs on some excess, as they say, excess expenditure that has been going on in some sectors, right, with the hope of reducing the government debt and targeting to reduce inflation, which is the increase in prices over time. Now you can see that the Treasury yield has been dropping because as interest rates, if there's a possibility of interest rates, right, increasing, right, it affects the yield in this case. So you can see that it has been dropping over the past couple of days. And what then happens is that if it goes down, the cost of borrowing will go down, the cost of mortgages will go down, and bonds will likely rally. In other words, they will go up and the yield will fall. Now, the challenge is if there is going to be a recession, which is a slowdown in economic activity and is usually measured by different indicators. Let's say if unemployment or GDP is contracting for some a couple of months, and then the stock market is dropping, then the whole economy, that might cause a slowdown, and a lot of companies that have a lot of debt might then start to feel the pain, and companies may become more conservative. Some people might lose jobs, and that's what usually happens. And I was looking at this from the perspective that it depends on which side, how these tariffs will go. And I got this from the analysis from Dr. Steinberg. And he has a model that actually, he says that he plugged in the information, and in the case of the tariffs, which in this case, if President Trump doesn't reverse them, the Trump administration doesn't reverse them, over the short term, we are going to see the Canadian GDP drop or by 0.25%, and over the long term by 0.89%. So this is serious stuff, right? And Mexico's GDP is going to contract even more by 0.99% over the long term. Now, I'm saying this because the implication is that some people might lose jobs, the cost of goods might increase over the short term or even over the long term if this is not contained, because now the prices of, let's say, gasoline increases, it might increase the cost of other like goods, the cost, or let's say, because companies, let's say, they have running costs like fuel, and if fuel increases, right, it means it might be passed on down the production stream. And what this means is that at the end of the day, some consumers for those particular goods, they might pay more. Now, if you look at it, there might be some school of thought that thinks that I was reading Paul Krugman's article, and he clearly indicates he's a well-known economist, a Nobel laureate for that matter, and tariffs, according to him, and in theory, at the end of the day, it increases the costs, right? Usually, particularly in the US, consumers, because if the oil, it means it's going to increase the cost of production for most businesses. And even though the idea is to increase to protect the local industries, as President Trump claims, in this case, it will take time for the companies to ramp up production, to set up factories. And as this happens, what this means is that if there's a drop in the output, let's say the car manufacturing, let's say they were 1.5 million now, with the plants in the US, right? If the US plans, let's say it's gonna take maybe 4 years. I was listening to an ex-Toyota executive on CBC the other time, and they were saying like, maybe looking at maybe 4 years for them to, let's say, build the plans to get to a point of full capacity, because what happens is that some parts, they let's say their mind, let's say they come from Quebec or Ontario, and then they go to Michigan, they go to the US, they add something because there was the pact, right? I think it was in 1894, in terms of the trade, to make the trading barrier between Canada and the US much less. And what that means is that those car manufacturers, they just look at where there is the specialization in terms of, let's say, the specific car parts, and then they just ship it. It's just close by, they share the border, right? Detroit, and also even in Ontario. So what happens is there has been this integration of trade. Now, the problem is now there has to be disintegration. Like Canada has to look for other markets, and also even as other economists and other policy analysts have recommended, as Canadians, in this case, it is important to look at other markets beyond just the US. And what this is going to do, it takes time. And in the process, we might have some increases in prices as well. But over the long term, I think probably Canada should consider other export destinations, like increasing exports to the EU, Africa, Asia, but it takes time, right? Whilst also kind of managing and avoiding the same kind of situation, in my view, of over relying on one trading partner to say, let's say if we have 80% of our products, in this case, manufacturing, being too intensely integrated to the US. And again, there was a history to it from what I understand. And this is the reality, right? And also there's this rhetoric that President Trump keeps on saying he wants Canada to be a 51st state, which I find to be very strange, because Canada is a sovereign country. And at the end of the day, this is politics, there's also economics. And hence, how am I positioning myself? Right now, from what I'm seeing, it's very dicey, it's very risky to be trading, especially taking some short-term positions, because you don't know if he's going to say something on the State of the Nation address that's going to cause the market to drop and you were bullish, it means you're going to be caught up there. But for the long term, in terms of our portfolio, I actually added a few more shares, mostly on the exchange traded funds that track the S&P 500, and I had a position on the leveraged ETF, right, for NVIDIA, but that one I'm just holding, and once I see the profit, I'm just going to exit and then wait and see how things will go. The thing with investing is very, very important in my experience to just understand the things that you're investing in. For example, I am looking at a few other companies that have very little to low debt, because if the economy goes into the recession, some companies might even file for bankruptcy, right? I was looking at other stocks, and one thing that really concerns me is if you have a lot of debt to pay, especially long-term debt, what that means is it might be very difficult, because once there are some macroeconomic shock of, let's say, interest rates, there are some changes there, there's uncertainty, and the demand or the sales of that particular uh, business, drop, then the problem is the stock might drop. And if you got in at the top, for example, if you're looking at Tesla, it was at 485, and I think the growth that happened after President Trump won in the US was really not based on fundamentals. Now you are looking at Elon being at the center of Doge, and the sales are declining, the margins are declining. And what's happening, in my view, on Tesla stock, and this is not investment advice, is that it is showing a bearish sentiment. And if it's going to continue dropping, think of it if someone got in at 485. So that's why it's very, very important to have a margin of safety. But they still have a lot of cash on their balance sheet. And probably after this, who knows? But for me, I'm not owning Tesla directly because of those risks as well. And I am looking at individual companies. In this case, if there is a scenario where if President Trump in their State of Nation address or in the short term, he doesn't reverse this issue of tariffs, the US economy might possibly go into a recession, like I said. And some stocks might actually even drop even more. And the challenge also is that if you are invested in individual companies, right? The S&P 500, for example, right now, it has not dropped by much. It has not even dropped by 10%, which is a correction, right? But if you look at companies as NVIDIA, even Meta, most of these companies, for example, let's check, they have dropped, right, by even more than that. So most of my portfolio for the long term, I'm just buying index funds, because some sectors, even within the S&P 500, the utilities, they're actually going up, and they are not as sensitive to these tariffs, right? So if you have one stock and it drops by 50, 70%, it means the portfolio will take a big hit. So by having a diversified portfolio, you forego the potential upside of some individual companies that can grow as much, even much higher than the ETFs. But in times like this, that's when you see the importance of just, having compounded returns. To say if it drops, let's say by 5%, individual companies will have dropped by some 40, 50%. I saw a company called, I think, Sanova, that dropped by 64% yesterday, right? So if you had a big position, it means if you had 1,640,000 would be gone. In that case, I don't see that company, coming back, because they were talking about the possibility of a bankruptcy filing. So now you can see that, companies such as, in this case, like S&P 500, it's recovering 0.19%. But if you look at Tesla, it's 1.66%. They've recovered, right? These companies, Meta, it's 1.17. But my point here is, like, the S&P 500, for example, it has different sectors, right? And it's recovering. But at the end of the day, if you are heavily invested in individual companies, at least from my experience. Microsoft today, they hit their 52-week low, right? You really have to get in. I would like to get in when there is a very big margin of safety. In other words, if it is down by 40, 50%, right? So that even if it then drops after maybe going up, I would still be up. And the key thing now in this case is to also understand that maybe this has not bottomed. I don't know where this is going to bottom. So at the end of the day, what you want is you want to be very conservative, because if your portfolio drops by 70, 80%, it will be very hard to even break even if there are companies that don't have fundamentals. They might even declare bankruptcy. So that means you can possibly lose the money. But in my case, that's why I go for the ETF, the S&P 500 mostly. I have individual companies such as Amazon, right? And those companies I want to get in when I have a huge margin of safety. For other stocks that I'm considering, right, I want them to really drop, like I said. So this is my thought, and nobody can really tell with confidence to really say this is what is going to happen, because as it has been shown by the data, how the market has reacted, it's very volatile, it's very highly uncertain. So it's very, very important to be careful when you are investing. Or sometimes, I'm thinking of the long term to say after these 4 years in Canada, things might be settled. So the reason why I'm just buying some other shares for my long-term position, companies with the strong fundamentals, but also the S&P 500, which has been proven to show that it usually recovers. But past performance may not necessarily guarantee the future, right? But at least from the history, that's what I'm basing on the data to say when things are a little bit certain and all this is sorted out, those people who will have taken the risk might actually make money in the future. So that's it. I thought I would just share with you these insights to say, hey, this is what I'm seeing. What I'm seeing is a lot of uncertainty. So as a trader, I'm being extra cautious. As an investor, I am just averaging down some of the core positions in my ETFs, and I am opening a few other positions on companies that have little or no debt, that I believe to be undervalued, that have dropped. And that's my strategy. And keeping a little bit of cash, you never know how far this will go, because you might need the cash to deploy if the market drops by even more or into a bear territory, which is at least 20% drop in the equities market. So that's it. I hope you find this helpful. And don't forget to subscribe. And if you have any questions, feel free to reach out to me so that we can discuss if you want to learn more about how to invest in the financial markets. Until next time, trade and invest wisely, and may the markets be on your side.